Market showing some resiliency here. Earnings, of course, is what we came into. We were focused on that. We're in the middle of earnings season, and we saw some strong beats after the close last night. IBM, Procter & Gamble, United Technologies actually crushing their estimates. They got us off to a hot start, Dow up 300 points. And now, of course, was kind of struggling to hold on to those gains. But the question is listen, with 15% of S&P 500 companies already reporting, most upbeat, well, earnings actually matter like they used to. Clearstead Advisors Senior Managing Director Jim Awad's with us, along with Capital Wave Forecast Editor Shah Gilani. Jim, you remember when earnings, people say it's all about the earnings. And now there's like 733 things, and then earnings sort of a footnote. But,
well, left to its own devices, the market would like to go up based on earnings. I think if you listen to Jamie Dimon, Brian Moynihan at Davos, they expect the economy naturally would grow over 2% this year. Earnings would be up something like 6%, and you could expect the market to go up about that much left to the fundamentals. But we're being overwhelmed by these other issues, i.e. the shutdown and the trade negotiations, and we are sort of hostage to it.
But then, Shah, should that, to a degree, give us some sort of should that give us some sort of comfort? In other words, J.B. Hunt is down today, in part because FedEx got hit on this news on Amazon. J.B. Hunt had a pretty good number. They even raised their dividend today. So I'm looking at a company that beat, the stock went up, they just raised their dividend, and it's down sort of artificially. I mean, this environment does create opportunities. If you know the companies that are delivering on the bottom line, you got a pretty good list to work from.
Well, hopefully, the market can still trounce companies that are doing well earnings-wise. And you looked at this morning, you saw the market up big based on great earnings from a bunch of companies that came out, specifically companies that were in the Dow. You look right now, we're off more, we're only half of what we were up this morning. And some of those beats, including IBM was up over 10% at one point today. It's come back quite a little bit. I don't particularly see, I think there's a lot of shorting going on in some of these companies. So when good earnings come out, obviously the shorts have to cover. IBM is a case in point. I think this jump in IBM is unwarranted. IBM spent $110 billion in buyback since 2000. What do they have to show for that? And buying Red Hat for $34 billion, this is a business they should have been in and should have mastered themselves. So I'm looking for a point to short IBM in here. So I think this rally is a little fake. I think these earnings are good. And as we see with some of the losers today, stocks that are missing are getting punished. Stocks that are beating are getting hit.
That's been a recurring theme for a long time, though. Yes. I mean, you miss and you pay one heck of a price. Right. Also, what we're saying, too, is bifurcation. In other words, there's no such thing as a sector doing well. You've got to find the winners in those sectors. Today, for instance, Procter & Gamble, a pretty good number. They did well with beauty. And then, conversely, Kimberly-Clark is getting hammered. So it really does make it much more difficult.
Well, you have a market where the positives and the negatives are basically equally weighted, a little bit more to the positive side. But you got a market that's probably not going to go up or down a lot this year. So how do you make money? You make money by buying companies that are executing very well and beating their earnings estimates and buying them during periods when the market is under pressure for non-company specific reasons. But it absolutely makes sense that we're back into a company specific market.
Earnings estimates have come down for the first half, like 4.5% since October, since since the quarters they started forecasting it. How do you model for that? And could it be a good thing? We talked about expectations being low for IBM. Sometimes it ain't bad when the street is expecting, not great things.
Well, that's typical of the street. Analysts like to knock down their estimates, and I think management wants analysts to knock down their expectations coming into earnings season, because if they make a beat, then the stock price goes up. So that's typical of what markets have been doing for a long time. Well, Wall Street's done forever, if you don't mind. But right now, as Jim just said, we're in a stock picker's market right here. You can find two different companies in the same industry, and one is going up, one is going down. That's something. Sometimes it has to do with earnings. Sometimes it's just stock specific. In terms of the psychology of, is this company's products better than that company's products? It's a very tough market to trade.
It gets down to execution, though.
Yeah, yes, and what's making it more complicated now, the longer this shutdown goes on, the more it's going to impact first quarter earnings. Now, you'll get some of it in a bounce back when they do open up, but some of it is permanently lost. So if you're running a business now and you have uncertainty with shutdown and uncertainty with China, you're likely not to spend or hire. It diminishes economic activity.
All right, gentlemen. Thank you both very much. Appreciate it.
Pleasure.